Precious metals such as gold, silver, platinum are used by investors as a hedge against inflation or a safe haven during calamitous economic times. They also are valued for their rarity and their use in a broad range of industrial applications. Now, the ecosystem of precious metals include stocks and ETFs, as well as trading the metals themselves. Now, the question is, should investors be more bullish or bearish on precious metals? Also, are there any risks out there to look out for? Joining me to answer these questions and more, including very interesting view on China, is portfolio manager for Crescat Capital, Otavio Costa. Otavio, you're welcome. Thank you for joining us. We have a tweet from you. I think we're going to put that up on the screen if we have that, where you said if precious metal stocks were a sector, they would have the cleanest balance sheet of all time. You also said, add to the fact that margins are improving and free cash flow is about to double. This is a historic macro setup for this industry. Is that historic macro setup due to the volatility in equity markets or strictly balance sheet health and other fundamentals?
I think the fundamentals are aligned with the macro situation. When you look at the macro signs, the government debt levels remains critical, and I think that there's no organic growth in the economy today. So therefore, we believe governments will continue to boost their spending and deficits will continue to move higher. So the net treasury issuance surging forces the Federal Reserve to be buying treasuries. So that creates two dynamics. It expands the monetary base at the same time as you suppress long-term rates. It's what we call the supercharged environment for precious metals. That's just the macro side. Well, on the fundamental side, as you mentioned, a lot of the miners have been in a recession since 2011, and now things have been changing quite a lot. It's the first time that I see this industry looking so great with CapEx is still not increasing a lot, which means a lot of companies waiting for higher metal prices to begin to spend money, which means also the free cash flow has been improving significantly. Free cash flow is supposed to grow at about 108% just this next quarter. And I don't see any other industry growing the same levels. The balance sheet side, as you mentioned, I think the balance sheet has never looked so great at a period when you're in the early stages of a bull market for gold. It's important to point out also silver, which also looks incredibly attractive given the levels that it is trading today relative to gold. So I couldn't be more bullish in this sector, in this industry, and this part of the economy. And I think that we'll continue to see gold and silver prices moving higher. And along with that, miners is an incredible opportunity that still represents close to 0.7% of global equities today, which is kind of astonishing given that is the only industry that directly benefits from all this macro environment that we're seeing today.
Interesting, very interesting stuff. Now, I want to touch on what you just said about stocks, though. So there was a chart we're going to put that up, medium total debt to asset ratio chart with a number of equity market sectors compared to gold and silver miners all the way at the right. My question here to you, Otavio, is why expose an investment portfolio to mining stocks as opposed to just trading the precious metals themselves?
I think it's because the industry is worth about $500 billion today, in which if you look at gold, probably the gold market and the physical side and future side is probably worth about $9 trillion. And so there is certainly a catch-up trade for the miners in this case. Not only the big miners, but also the smaller miners. When you look at Apple today, Apple has a market cap somewhere close to $1.5 trillion, which is 3 times the size of the whole industry of the precious metals industry. And that's kind of insane in my view. I really believe that that's going to be a huge catch-up for the whole industry. As I said, it is the only industry in the world today that actually benefits from all this monetary experiment that we're seeing worldwide, not only in the Fed. So I think precious metals on the side of valuations look incredibly attractive, especially relative to tech stocks. When you look at tech stocks trading at 30, 40, 50, 60 times sales today, at the same time as you can find a lot of producers today trading at 5 to 6 to even 10 times free cash flow yield. So it's in my view, that is a trade-off that won't be available in the markets in the following years. I think we're gonna see miners taking off from here, along with precious metals. And I think the precious metals, answering your question, the miners is just an option. It's just a levered way of playing the possibility of gold prices moving higher here.
a balanced, you mentioned options, so a balanced precious metals portfolio would include hedging, holding it to hedge against inflation, plus mining stocks, plus ETFs.
Sure. We don't have any ETFs in our funds. We select our own basket of companies here at Crescat. But I think ETFs, depending on the ETF, I think you should be careful. A lot of those ETFs have more liquidity than the actual holdings that they have inside of the ETF. So I think that's something to be aware of. I'm a big fan of buying gold and buying silver and buying a selective amount of miners. Depending on the person and your risk appetite, well, there's the bigger miners, there's the royalties, there's the senior producers. And if you're looking for higher returns at cheaper valuations, in my view, that's more of the junior side and even the exploration side, which I think you need a little bit of or a lot of geologic expertise in order to really navigate that space. But there's a huge amount of opportunity, even in the drill stories, in our view, that I think there's very low amount of discoveries in the world today of gold and silver. So any explorer that is sitting on a great deposit today, gold or silver deposit, will certainly be beat up by the seniors and the bigger companies. So I think that's also the opportunity today. It's the entire industry, but in our view, our biggest focus right now has been in the junior explorers, as we think that we're in the early stages of a big move here for gold, not in the late stages. So you should be focusing on the ones that have a little bit higher risk, but also higher returns. So I think that's what we're doing here at Crescat. I think there's some opportunities in the entire industry, in my view.
Fantastic. You already touched on Apple, so and as far as market cap versus the mining industry. So just to double back on that, you do see potential in the market cap for the precious mining industry to rise by as much as where Apple is now, or there's still room to increase?
Look, I think I have nothing against Apple personally. Actually, I think Apple is one of the healthiest companies out there compared to other companies like Zoom, for instance. I don't want to pick on one or two companies, but there's some sectors, some parts of the tech sector that look insanely overvalued. Now, I just believe that this entire industry doesn't deserve to be 3 times less than the market cap of one company, and it doesn't matter what company it is, okay? And I think that this entire industry will be heating up significantly according to if gold prices and silver prices continue to move higher, and if you look at bond prices continue to move our bond prices rallying along with yields moving lower, I think it gives you another opportunity of buying precious metals. Investors will be looking more and more at other ways of investing in this whole sector or this whole part of the economy, which is alternatives of the monetary system, gold, silver, and miners will be the beneficiaries of all this, especially the miners that actually have production outside of the U.S. that also benefit from the foreign currency exposure, which means if there is a depreciation of currencies outside of the U.S. as well, those should actually boost their margins and help them quite a lot. So that's where we're focused in terms of those as well. I think that the foreign producers could be doing quite well if we see emerging market currencies depreciating going forward as well.
Right, yeah, the dollars has been getting stronger, so that is very, very likely to happen. Just want to get your thoughts real quick on U.S. equities. So while we're talking about stuff overheating, how have you assessed the intervention activity of the Federal Reserve and its impact on U.S. equities? Like, for instance, you're saying tech stocks 60 times sales, overvalued. How do you assess what the Federal Reserve has been doing?
Well, the Federal Reserve has been providing liquidity to the equity markets, even though I believe that we're actually seeing a withdrawal of liquidity rather than an injection. And my view on that is given the size of net treasury issuance that we see by the governments. And so we see debt levels that are getting quite alarming. I just tweeted a chart on that showing the debt levels in the corporations too. So the Federal Reserve is painted into a corner in which they have to continue to buy assets in order to make cost of capital cheap, not only for the government, but corporations and also households too. But the sentiment in the market is euphoric. In my view, I think bears capitulating. We have Robinhood traders or day traders trashing in-depth research on 10Ks and 10Qs. I see people mocking Warren Buffett. I see people saying fundamentals don't matter anymore. I think this is not going to end well. And it's very clear to me that when you have, especially corporate bond yields at record lows today, that is not a bullish sign. That is not the sign that you see at the bottom of the market. That's the sign you see at the top of the market. And I think investors are missing that message in a huge way. And I think that's not going to end well. Again, I'm a big believer of buying gold and selling stocks. I think gold and the whole precious metals industry, when I say gold, I really mean to say gold, silver, and the miners. I think this whole industry and this whole part of the economy looks a lot more attractive than overall equities at record valuations, record leverage, and with something that needs the Federal Reserve to hold their hands almost daily in order to keep those valuations afloat. And I don't think that that's going to be sustainable. I think more and more we're going to see investors looking for growth. And for growth, where you can find growth today, it's not on tech stocks. Tech earnings are all declining pretty much. And what we see where growth is on the miner side, where free cash flow is growing. It's supposed to double in this next quarter. So that's the difference in my view. It's pretty clear. And I think investors will starting to heat up and catch up to this view.
Thank you for that. So you're bullish. Now, can you take me through any risks, any headwinds at all that could be facing precious metals that global investors should look out for?
I think the risk of precious metals, where I could be wrong, and I want to just emphasize, I'm bullish on precious metals. I'm not bullish on equity markets overall. I am bullish on precious metals, and I think the biggest risk there is if companies and the economy starts to grow organically. I don't think that that's the case here. I think we're in a recession or perhaps in a depression, especially in the terms of labor markets. I think companies are reluctant to spend capital, number one. CapEx estimates are plunging. They're not increasing. Matter of fact, they have barely rebounded, different than other indicators that we see out there. So, I don't think a lot of the capital-intensive businesses will be hiring anytime soon. And I think that that's all creating an environment in which the Federal Reserve will have to continue to do more and more monetary stimulus to fund fiscal stimulus. And as we see this happening, I think investors will start seen inflows towards the precious metals industry.
Okay, great. So if I can flip this, if you want to hold precious metals to hedge against inflation, how do you hedge against the downside of the downside risk in precious metals?
Yeah, so I think the downside is obviously if we see organic growth. In terms of deflation versus inflation, I believe gold can work in both environments right now. So if there's a deflationary environment in which bond yields decline even further, and we see negative 2-year yields and so forth, or 10-year yields in the U.S. going negative, and sovereign bonds worldwide having yields going negative as well, even more than what they are today, I think more people will be looking for better alternatives of investments in which gold will serve that purpose in a perfect way, in my view. So I think that that's really the point. In an inflationary world, I think inflation expectation has been suppressed by the Federal Reserve. The Federal Reserve owns over 30% of the TIPS market, which really is your inflation expectation market, where we measure in the markets how inflation expectation actually is being priced in. So this is completely suppressed by the Federal Reserve. And I view that if we do have inflation exploding here to the upside, just a possible scenario. It's not my base case in the next year or so. But if that happens, I think gold is extremely undervalued. So it doesn't really matter to me where it is an inflationary, deflationary environment. I think gold could work really well on both sides. I think where your risk is if there is organic growth, as I said. If fundamentals of companies begin to grow by themselves rather than by stimulative packages outside of companies in which governments and the Federal Reserve is actually having to boost their fundamentals, in which a lot of times money printing doesn't really actually help on economic activity. It only boosts asset prices in a way, and that's not a guaranteed thing either. But it has been happening recently. So that's just my point. I think.
I got you, Otavio. I wanted to get to China, but we've run out of time. Very informative. We've got to get you back to talk about some more stuff. Otavio Costa there, Global Macro Strategist at Costa Capital.